I can't hear you, Gil.
Oh, okay. You ready to go, or you want me? I'll go ahead and start. I just wanted to give everybody a
There we
heads up
go.
real quick.
I'm ready to go. I'm
Okay.
good.
Just real
Yeah.
quick.
So
Let me just put out a caveat. This PC, for some reason, has decided it likes to reboot itself all of a sudden during the day. So in case that happens and we suddenly black out, everybody should log off the webinar, and then I'm going to try and reboot and come back on. So just in case happens, we want to be ready for that contingency. So Dr. K, take it away.
Well, good afternoon, everyone. Hope everyone's having a lovely day. We've got the averages that have been about as noisy and directionless as they come. They're trying to break through to new highs. Right now, they've broken through recent highs. The question is whether they can continue on after all this slop and chop since mid-December. We have had a number of viable gap-ups, which is good news for leading stocks. At the same time, leaders as a whole are not really all that convincing in terms of really going the extra mile. So we'll have to see how this one plays out. We've got oil that took a bounce, and then it fell 8% overnight. There's a lot of volatility out there, and the oil downtrend, which has been persistent since June of last year, could very well still be intact. I mean, we did have a nice bounce because of a few fundamentals that struck in oil's favor, but those strike me also as possibly limited, and I wouldn't be surprised to see the price of oil roll over again and start to retest new lows. Commodities as well. We've got a global slowdown in China. We've got European markets that have been flirting with a third recession. We've got the U.S. market that unemployment ticked up 1.1%. It's kind of a non-event, but these unemployment figures are quite doctored. The CPI is quite doctored, and it's all designed so the Fed can say that we can start raising rates at some point. In other words, they want to help to start raising these rates because ultimately rates are at unusually low levels for an unprecedented amount of time, and they would like to start increasing rates, be the first to do so. The U.S. is the tallest standing midget right now, and it's reflected by the performance in the U.S. markets versus, say, European markets or the U.K. market or the Chinese market, the Russian market. These are all markets that are dragging along. I'd like to reiterate that. The Chinese market it has overall been struggling over the last year, and it's trying to break through to one-year new highs. We'll see if it can do that. The Chinese market is, for all intents and purposes, still on a slowdown. So I think it's going to be stuck in the sideways trading range. And we also see, the U.S. markets being the tallest standing midget. They're trying to break to new highs, but we've been in a slop and chop for the last, almost 2 months. So without the fundamentals in place, which they are not, and without QE4 there intact, I think that we're going to see more of this tug-of-war going on between the expectation of more QE, which I do think is inevitable, and loss of confidence in the markets because QE really has not solved the global economic crisis that has been upon us for quite some time now. Gil?
Yeah, I would not, speaking for myself, I wouldn't get into some idea that the fundamentals, the economic fundamentals don't justify a movement higher in the markets, because I remember very distinctly in March of 2003, that was right after we moved into Iraq, and the market turned, and I can remember a lot of commentators getting on TV and saying that the economic fundamentals do not justify a bull market, but yet we had a pretty good move. So I don't think, because the market is a discounting mechanism, Dr. K, I think you kind of have to be forward-looking in the sense that you just watch what the market's doing. So from my perspective,
Well, ultimately, QE4 is going to come. We're going to have QE of some sort, and fighting the Fed is not a good recipe because look what the Fed's done since 2009. But in the meantime, we are going through slop and chop, so I wouldn't be surprised to see more of this kind of noise in the markets. That said, we have had viable gap ups. We could get a pocket of some sort of uptrend. in which case the MDM would like to participate, and it could go to a buy signal sooner than we think. But right now, I mean, everything's pointing to more noise in the markets. So we'll have to see how these leading stocks with renewed viable gap ups play out.
Yeah, I'll just speak from my own visceral experience, and that is trying to work the short side, even on days where the market looks ugly. You know, I'm coming after stocks like Workday, and it just keeps going higher. You know, it comes up to the top of this range, and you think you're going to put a short out here, and you're immediately stopped out. Some of these others that I've been working on, Splunk, you know, same thing there. If you look at Netflix, it looked like it was going to break down. It's kind of acting kind of weak today, but came down in here to the 10-day and bounced off. And it's basically just holding sideways. Other names like Amazon, this is one that I was looking at short back in here, but it's gapped up. And despite the skepticism about the gap up move, it's continued higher. Google was another one I thought was a short. And, you know, it started to break down on Monday. This is Monday right here, 5 days ago on this chart. And then it closed near the peak of the range. It's holding above the 50-day moving average, which is a thick blue one. And it's trying to move higher, even though the earnings report wasn't so great. Meanwhile, you've got Twitter gapping up on a gap up move that nobody wants to believe, and you actually got several sell signals in the stock, and it's going higher. You could have bought it this morning and you'd be up a couple of bucks already. LinkedIn, if you'd have told me at the beginning of this week that by the end of the week I would be long LinkedIn, I would have thought you were off your rocker. And yet I came in, I tested the low here, 261. I come right into it around 262, just above 262, and I'm long LinkedIn. The other one I'm long here is Tableau Software Data. That's a huge gap up here. It's coming in. I think that's a gift. You're going to get some sellers in here, but if you look at what's going on in the weekly, it's a big breakout. And I wouldn't really call this a pod per se, because remember, a pod is as a pod does. And it's had a lot of time to consolidate on the way up. So you don't get this straight down and then straight up. You know, if you had a move straight up that's comparable and symmetrical, say, to this move, then I would be skeptical. But here now you're breaking out of a long-term base. And I was checking the sponsorship on this last night, and I noticed that Fidelity Contra Fund has taken a new position of a couple of 100,000 shares. And Fidelity Magellan Fund has been in the stock for the last 2 quarters. So you want to know who's pushing it up the right side of this big cup on these big upside weeks here. It's these guys, and they're long this thing. And if Fidelity Contra Fund is long this thing as of the most recent quarter, and they just took an initial position, my guess is Will knows what he's doing, and this thing's probably got more upside in it. So I think it's an easy trade. The closer you can buy it to the 95.16 low of yesterday, the better you are. Better off you are, rather. And of course, to give you a little bit of that gift this morning, coming down around 96, dipped below 96 briefly, but as I saw it, you know, the thing is just pulling in because it's up there, and you know, IBD tells you it's extended, because even though they'll tell you that you can buy gap up moves in leading stocks, they don't really specify how you do it, which in a way is acknowledging Dr. K's work on the Bible gap up setup, without really acknowledging it, because they've got their head up their rear end. But in any case, this is a Bible gap up. The 95.16 low is your stop, and my expectation is it's going to push through the 100 level pretty soon. And on that basis, I'm very long the stock. I think right now I'm about 60% long at this point. The pullback today gave me a chance to get in heavier. I think also this one, Grubhub, a big gap up. Now, one of the issues here, this is the base, so you're trying to come out of this base, is that you're coming off of this V position here. And so I figured yesterday morning I saw it run up, but I like this story, and I think it's got potentially more upside. Today we're up another $1.26 on it. So what I did is I watched this, and so my theory here is that the Bible gap up is suspect in terms of its velocity, because it's already come up off the bottom. So it's going to need to come in, and that's exactly what it did yesterday. And so I'm just watching this thing. You can see it coming. You know, they gap it up in the morning. Here's a 5-minute 620 chart. So it runs up in the morning up to like 41 and change, up close to 42. It's bopping around, and then it starts to sell off. So here's your 620 sell signal. But as you're coming in, you get a little MACD stretch down here, and then the MACD starts to turn. And then once you get this coming up through here, now I'm buying the stock around 39.60, 39.70, and I think your stop in that case is pretty reasonable. I think the low for the day was 30. Whoops, this would be yesterday. 38.82. So buying at 39.60 seemed to me to be reasonable in terms of the downside risk. Somebody says I have no sound. Any suggestions? I don't know. Maybe it's your internet service. Is there everybody else here? Is just fine, right? Yes. So, it might something with your internet or something. I don't know. I'm not really a tech consultant, to tell you the truth. So, anyways, Grub I like. I own that. I own the data. I own LinkedIn. Should have bought some Twitter this morning. Some other names to look at. Intrexon had a big move up and came back in on a secondary offering, I think, of 2.75 million shares. They priced it at 27 and change. Down here as it bounced off the 50-day. Now it's setting up. Watch for a pocket pivot. May be ready to go. Zeltiq. This is a stock that you buy every time it pulls into the 10-day, I guess. It's running up. Earnings come out towards the end of February, and my inclination would be to leave it alone. If it's up, maybe you sell it and then wait for it to come in. Or you could just hold it because you probably have a nice profit in it if you bought it down in here on this pocket pivot down here. Let's say LCI Lanet. Bible gap up yesterday now with the low of 50.28. So you don't only want to buy this on pullbacks towards that low. It's a little extended here, but it's acting well. Somebody says, tell them to try the telephone link. Yeah, you can actually call in on an 800 number and listen to the audio that way. Let's see, what else is hopping and bopping here? Fleet is moving. Big outside reversal on earnings. Not sure what to make of this, but it looks pretty strong. CyberArk is also trying to make a comeback. You actually get a pocket pivot off the 10-day. It's coming off of a position on a double bottom, so that might actually work. Earnings come out, I think, in the next few days. I'm not sure exactly when, but I don't really see any reason to have to jump in there unless you feel really lucky, or you have a nice cushion in your account right now because of some other names that maybe you bought yesterday or the day before. But this had a pocket pivot. You're in a position, though, under the 50-day. So this is it's trying to recover on a big double bottom. So something to watch for. Let's see. Skyworks, I think, is tightening up along the 10-day, looking for a continuation pocket pivot. You could probably just buy it right here. If the market goes higher, it will go higher. Infineon, finally, it takes a long time to come off. Here's a Bible gap. If it fails, bounces off the 10-day, and now is moving back up to the highs. Not really my favorite name. I'd rather be long, LinkedIn, Grubhub, Data, Zeltiq, Twitter, Exxon, XON, etc. AKRX, I think a couple of weeks ago somebody wanted to short this thing. I said it looked like it wanted to go higher, and it has. It's extended, but acting well. JetBlue among the airlines, also acting well off the 10-day line, which means Love is probably going to come off the 20-day as well. Those are two of the better airlines, I think. Save, it's trying to make a comeback. You got this big gap up, but nothing really concrete there. NXPI is moving up on a breakout. I think they came out with earnings. Did they come out with earnings last night?
Let me just check here. I think they did. Let's just check real quick.
Let's see.
So they're moving up on a good earnings report there.
Yeah, 36%. So that looks good. That's possible you could buy that on a breakout. 82.76 is the top of that breakout. So you're basically right above it. That looks okay. And when does Skyworks? They already came out with earnings, right? I think that one looks okay. Yeah, I think that one looks very good along the 10-day. I kind of favor that right here. Let's see. Somebody says Cyber reports 212. Did you buy LCA at the most recent bounce off the 200-day moving average? No. Why would I do that? You could have bought it on this. Here's a buyable gap up, but actually what I saw here was a pocket pivot right there. So I don't, why would I just buy it at the 200-day moving average? Seems kind of amateurish. Cyber reports 212. Let's see. Another one that seems to be acting well is this Freescale. I had a buyable gap up, and it's been able to move higher. So that looks constructive. This Vive, I'm noticing they came out with earnings pretty soon, but it's trying to come up and out of here. Pocket pivot right here, so off the 10-day roughly, and it's pulled back in. Not really going anywhere just yet. but it looks okay. Starbucks is coming back up off the 10-day moving average. I actually tried shorting this a couple days ago, and of course yesterday I got blown out pretty quick. If I short something into a peak like right up here and it doesn't really come in, I'll just turn around and cover it. And that's been my experience on the short side the last few days. Is that nothing worked, and so I'm starting to feel rather that you've got no real function to sell. And a lot of these names are starting to emerge. And the other thing is that I like earnings season for the simple reason that that's when you start to see a lot of viable gap-ups. And what I like about viable gap-ups is that, number one, the crowd, e.g. those who read IBD, believe that they're all extended and they're way up there, but they're very viable positions based on the viable gap-up parameters that Dr. K has come up with. And it's very sound in that regard. Of course, not every viable gap-up is going to work. I think you have to look at leading stocks or stocks that really have some thematic basis to be a strong leader, rather than just saying, oh, there's a viable gap up and I'll just buy it. I think one of the things I would like to see HGS Investor Software do, and I think one of the things they're doing is they put these little blue marks and everything whenever you have a viable gap up or a pocket pivot, but it oversimplifies the process in my view, because not every single pocket pivot in every single stock is a valid signal. You have to understand the contextual factors that go with it. Right, Dr. K?
We, of course, talk about this extensively in our books and also in published work that we put on the website. It's all about the quality of the price-volume action leading up to that pocket pivot or that viable gap up. And that quality is, of course, going to be contextual. Case in point would be Schwab back in, I think, 1998. It had what appeared to be a horribly sloppy base, but relative to the market, which was even sloppier, Schwab's base was actually very constructive and tight relative to the general market, therefore was actionable on the breakout. And
let me see.
Bill O'Neill bought into it. I bought into it. Jill bought into it. I think we all bought into it. We saw the opening.
I'm trying to get there.
We also.
This is going to take a while. Yeah, forget it. I'm not bothering with it. Sorry.
Yeah, I mean, I think our listeners understand the whole thing about context. You could have a very sloppy market, but if the stock in question is holding relatively tight, then it's actionable. In other words, it is actually showing less noise than the general market. It's not allowing the general market to sway itself. However, you contrast that to a constructive uptrending market that's very tight on an uptrend, and you see that same chart of that stock, like if you saw Schwab, and that same chart, and that yet the market was in an uptrend, then that Schwab chart would be very non-constructive, rather destructive, and you'd be a fool to be buying any kind of breakout in that context.
Let's see. Let's look at some other names here. Okay, Ambarella got chopped up after, well, it didn't really get chopped up, but it got knocked back. Had a pocket pivot yesterday. Probably in anticipation of a strong earnings report from GoPro, which they actually did come out with a strong earnings report, but I don't think anybody was impressed with their guidance. And so what happened there is they got hacked and gapping down this morning. So Ambarella coming back in, but it's holding in there. Okay, I'm not sure I would buy this thing going into earnings. I think earnings are, beginning of March. So not really clear to me that I want to be playing there necessarily.
Yeah, the thing about stocks also is that when that report we sent out after the close, and obviously if you see this stock starting to trade lower from the close, you shouldn't be touching it because something is not right.
Right.
And that clearly when it got down today on volume, you leave this one alone. These reports of course just put out as okay, it's had a pocket pivot off a good base and the fundamentals are there. So as long as everything stays in place, then it is actionable. However, things did not stay in place as we saw after the close yesterday.
Kacher's another one that comes out with earnings, and it's just tracking sideways. I thought this was not so constructive. You get this pocket pivot here, and then it moves higher, and then you come back in, you dip below the 20-day moving average, but I'm sure that was support at the 50-day, or the 10-week rather. Here on the weekly chart, but this one's acting okay. It's just probably waiting to set up. Maybe it's earnings that get it going. Ambarella reports earnings on March 4th. That So you got some time there if you want to buy it, but it doesn't seem to be doing anything. So Michael's Stores has been acting okay. That one's Bible gap up here, and it's continued to go higher very slowly, but still going higher. Let's see. Yelp getting pummeled today on a gap down. That's looking pretty grim. Look at that. Big head and shoulders and bombs away. I think Grubhub for some reason will benefit. They're moving higher here. What are you guys all buying these things? I noticed that after I talk about these, like Grub and Data and XON, they all start to move higher. I hope you guys aren't just buying them because I mentioned them. You want to do it based on the proper position. Yahoo's another doggy stock. Little dead cat bounce. It's starting to stabilize here, and if the market continues higher, I don't think you're going to get any real juice out of it on the short side. It could be a white coffee and retest, and it's basically coming down with BABA, which continues to die and is all the way back to the lows of its IPO U-turn base. I'm watching Data is starting to turn here. You could see this morning I was watching it, and then it's coming in. Notice you get the MACD stretch here, and then it comes in a little lower, and then your MACD lines, your histogram here, is starting to turn. And then once you get the cross here, then I'll start jumping into and adding to my position on the turn. And it looks to me like it's going to head for 100 today. So far so good. And of course, once we get to the century mark, then we have Livermore's century mark rule comes into play. So somebody says, glad I got rid of BABA last year. Yeah, I mean, the key here is if you bought the pocket pivot here, and it runs up to 120, and IBD's telling you, here's a breakout, and it's up 20% in 2 weeks or less or whatever, and you got to hold it for 8 weeks like some moron. Well, you basically, if you held it 8 weeks, you probably held it into here, and you gave up most of your gains. The way we like to operate in this market, and we've talked about it many, many, many times, is that you get a 20, 30% gain in the stock, you take it. And the beauty of this is that you don't necessarily have to take the stock off your watch list and forget about it, because it may come in and set up along a moving average and issue a continuation pocket pivot. So whereas I think these silly rules about holding a stock for 8 weeks, which are statistically false, okay? It is statistically false, and I don't understand why they keep peddling that rule. Probably because they're too dumb to come up with anything new. And I just think it ends up killing people. But the whole idea of taking gains when you have them and then using pocket pivots to come back in, continuation pocket pivots to come back into a leading stock, allows you to campaign it on the long side without risking giving up your gains in what has been a QE type of market that sees stocks run up 20, 30% and then give it all up. And that's a much, much more concrete and precise way to operate, rather than these blind and stupid rules that really have no basis in statistical reality. Somebody says, I did buy the pocket pivot, did not hold for 8 weeks. Yeah, because you're smart. And, you get that kind of gain that quickly, and you take it. You take some off the table at some point. Sometimes I'll use a 10-day line as a trailing stop when something gets really steep on the upside, and that would have worked pretty well. I think I ended up selling this around 114, and then I was trying to buy it back off the 10-day or 20-day, and that didn't work. But you see how you get these ants, which is the old rule of the stock up 12 out of 15 days in a row or better. This doesn't work anymore. This is more a sign of extension to the upside. And you can go look at any of these if you're able to set this up on your charts. That old rule doesn't work anymore. So if something starts showing these 4, 5, 6 days of it, it's generally extended. So I'm going to ask the guys at HTS Investor if they can set up something like this on their charts, an indicator where stock is up 12 out of 15 days in a row. I would think they'd be able to do it. Wanting to learn from your entry into LCI, when you bought off the pocket pivot, where did you place your stop so that you weren't stopped out on January 22nd? Well, to tell you the truth, I didn't buy it on the pocket pivot. I bought it on the pullback. And then you sell into the up move, and that's what I'll do. And then you buy it back on the pullback. But I kind of blew this one off because it's a little bit thin. It trades 686,000 shares. So one of the things I never do is buy strength. So if I see a pocket pivot and then I see it pull back and the volume dries up like you're seeing here, that's where I'll come after it, and not necessarily on the up move. So somebody says TY. Does that mean thank you?
Yeah.
Okay. I'm not up on all these texting abbreviations, so, but they are a new language. So I can remember back when I was at Merrill Lynch, the manager of the Merrill Lynch office in Beverly Hills that I worked at, Bob Callahan. He's an Italian-Irish guy from the Bronx. And he was lamenting the fact that kids, and this is in like 1991, 92, and he's lamenting the fact that kids no longer have penmanship skills because they're all using keyboards on computers. And I laughed and I said, well, I suppose then when the pen was invented that people lamented that kids no longer had chiseling skills to be able to chisel into rock as cavemen did way back when, given that there was this newfangled pen thing out there. So I think everything evolves. I hear parents complain about the language that the kids use today when they're texting, but if you think about it, it's extremely effective and very expedient, and I don't really see what the issue is with it. I think it's just a new language evolving, and that's kind of the way of humanity, I think. Right, Dr. K?
Saying that that this has been true since the dawn of time, that the new generation always comes up with cleverer, better, superior, vastly more efficient ways of doing things, and the older generation always tries to tear it down. And there's really no exception to this rule. And I mean, as they say, I am timeless. That's the highest compliment you can pay me, is I am timeless. And as in, I still feel like I'm 5 years old. I remember what it's like to be 5 years old. I've never lost my roots. But somehow with adults, adults don't remember what it was like to be 3 or 2 or 4. I don't know why. I don't know why their brains get wiped like that. I mean, I'm wired differently, but I really support the next generation because they're the ones that are going to come out with the great ideas, and the next Bill Gates, the next, very, very, Glenn Seaborgs, the next Bill O'Neills, the next, you name it. These are the future generation. Everything lies with them. So,
Yeah.
I'll get off my soapbox, but we need to keep these educational systems going, and that's a whole different discussion altogether. But, yeah, I think everyone knows where I stand on this.
Yeah, I think for those of you who are parents, I think you need to embrace and investigate what your kids are doing, because you really get a lot of good clues from where they're at in terms of the methods or ways of communicating or interacting and everything else. So, in fact, my daughter is, I guess at her school they're going to debate, they're having a debate competition, and she's involved in it, and they're debating whether marijuana should be legalized. And she was pointing out that the original criminalization of marijuana occurred in 1937. There was a guy who was the head of the DEA, which is a newly formed agency at that time, who testified before Congress that Mexicans are crazy because they smoke marijuana. Blacks smoke marijuana and believe that they're equal to white men, and then they begin to look sexually at white women. And she's telling me about something. Are you kidding me? Say, like somebody testifying to Congress using these phrases or these ideas. Imagine if that happened today. So, but anyway, I thought that was pretty interesting. Not sure why I went off on that, but she thought it was kind of stupid.
As an aside, criminalization of alcohol consumption began in 1920 and stayed around until 1933.
That's right.
And there were a lot of propaganda that people probably don't remember because it's before their time, but somehow I remember it like I lived through it, because people say I'm over 100.
Yeah.
But I remember it like it was yesterday, and they had all these articles out there about how, propaganda against alcohol, like it'll make you insane and make you crazy. Not a whole lot different than the 60s anti-propaganda against marijuana.
Yeah, I mean, I don't know. In college, I remember smoking pot, and that just made me want to go to Jack in the Box. So I don't remember actually being crazy or anything. But, I am Mexican, so maybe I am crazy. In any case, we're kind of babbling here because I'm waiting to see if you guys have any good questions. Because as far as I'm concerned, I pretty much covered everything I like. And so I'm giving you guys ideas. And since we've been going on, I think data has rallied a couple of bucks off the lows. Grub has moved higher. Most of these stocks look like they're trying to move higher. Facebook, it's interesting that Twitter, with a big gap up move today, Facebook going nowhere, but I tend to think that it's overowned. Now, if the market doesn't blow apart, then Facebook's probably just going to hang out and maybe continue to base, and maybe it needs to shake out some people to get set up again to go. Somebody asked a good question. Let's see, we got a couple of questions here. Faye is in a kind of quiet accumulation. His earnings coming up next week. I believe they are. I think this is a group, well, with cyber starting to come to life, Vasco data coming to life a little bit, but not really. I think cyber is a better name. Maybe these are, but I wouldn't be messing around with them. Somebody asked, did O'Neill study Wyckoff? The IBD breaks look a bit like the breakout from a trading range, but it does not take into account that the backup into the range, hence the 8-week rule, does not work. Here's what's interesting. When we wrote our first book, we actually gave O'Neill the courtesy of providing him with the copy of the book so that he could read it for inaccuracies. And he said one of his responses was that he never read Wyckoff. And I have it in my diary where he's talking about Wyckoff as a guy who first wrote about Livermore back in the early 1900s in his magazine, The Magazine of Wall Street. So I'm thinking, Bill, you're all wet again. You did mention Wyckoff to me, and if you look at Wyckoff's work, you can see that O'Neill borrowed heavily from it. In fact, Wyckoff has a similar story about, how O'Neill has the red dress story. If you're in a store and the red dresses are...
And Wyckoff's got the equivalent.
Yeah, he's got the same thing. And so for O'Neill to say he never read Wyckoff, that's BS. He took a lot of stuff from him. Took a lot of stuff from Livermore, and we take a lot of stuff from O'Neill, Wyckoff, and Livermore, and we're not ashamed of that, but I think we've improved upon it quite a bit, so if I may say so myself. So whether, Gar, you're asking, whether he studied Wyckoff, he'll say he didn't, but, we ran into trouble. They sent their lawyers after us, trying to claim that, we were revealing secrets, and that's a bunch of BS, because we were able to show that everything we talked about in the book had already been made public by them. And I have boxes and reams of documents from O'Neill that they were throwing out when I was moving into my office there, and I kept them all. And there's a lot of good stuff in there. Maybe that'll come out in my next book, couple books from now. Well, I heard they can be. Yeah, well, they are, and I think that's their mistake, because a lot of people, if you let people use your stuff and you allow them to spread the word, nobody's been proprietary about Christianity, and that's spread around. Nobody's been proprietary about the Internet, and that's spread around. But that's how they think, and I think that's because they have a lot of low-aptitude people that work there. My view is that O'Neill is more a sieve for mediocrity. Anybody who's smart eventually ends up leaving. I think probably the smartest guy there is Lee Freestone, and he's smart because he doesn't get involved in everything. I remember when they started doing the weekend seminar where they're ripping you off for $15,000 to spend a weekend with Bill O'Neill and his incredible portfolio managers. But Lee, who is the best one there, wrote a letter that he felt that this weekend webinar would diminish O'Neill's reputation, and that he respectfully declined from participating. And he never had to do it. So they didn't ask me to do it because I was busy running the institutional group. And somehow, Dr. K, you avoided that because you were already helping him with the short one-day seminars. But yeah, I mean, and it's kind of sad. But anyways, we're digressing a lot. I'm just waiting to see if there's any good questions coming in. So far, I don't see anything. So, let's go through some other stuff then. Biotechs are volatile. Gilead got hammered on a gap down, rallying into the 50-day. Maybe that becomes shortable. The only thing with the short side here is that I don't think it's got legs right now. I think you're going to break out of this range. That's what it looks like now. And I can just go by my own visceral experience over the last few days where I'm trying to short some stocks, and I'm getting some traction on names like Yahoo and maybe a little bit with Facebook as well, but nothing really significant. And then I'm feeling a couple days ago that everything's pushing against me. And I use that information to my advantage. And I think that's what you want to do. When you feel the market pushing against you when you're shorting, then what do? You go long. I actually tested a short position in data yesterday because I was watching it, and for those of you who were watching yesterday intraday, it started to come in. It actually got down close to 95. The low was 95.16. And so then it kind of lifted a little bit off of there. So I tried shorting a little bit, and they took them from me right away. So I just flipped and went long. And I have no problem with that. And I think that's really a key to making money in the markets, is understanding what the market is telling you rather than trying to impose your view on the market. So anyways, JD, somebody asked about trying to, whoops, what happened? Back.
Actually, I just want to, in fact, I actually my 2 cents here, because we don't like to predict the future because it doesn't exist, but I wouldn't be all that surprised if the market then does an about face in the next few days, and we not only retest lows, but we undercut them to scare everyone out of the market, and then the market finally rallies on a concerted uptrend.
Maybe, unless you already did that, because what I would point out is you had the low here, then one rally off the low fails, second rally off the low fails, third rally off the low, everybody's expecting to fail, and it doesn't. So it could fake everybody out. From my perspective, operationally speaking, in terms of what I'm going to do in the market, I'm just watching the stocks, and I think the stocks tell you what to do.
On a day-to-day basis, this long side is the place to be in stocks right now, but on a weekly basis, I'm seeing a bit too much noise in the patterns overall over the last, since December, that I wouldn't be surprised that the market fakes everyone. It breaks to new highs, fakes everyone in, and then breaks to new lows in the ensuing days. Then it finally finds its feet. And then maybe we actually get a really deep undercut, and maybe that prompts the Fed to start hinting about QE4.
Yeah, maybe, or maybe not. I don't know. I'm just going with the stocks, and that's what I'm going to do rather than speculating about what might happen. Because the one thing I already know is I thought, Dr. K, I thought this thing looked weak. I thought we were getting ready to bust. And, of course, it turns around and goes up. And then the other big development is that you're seeing a lot of stocks that are emerging as new leadership, which I think is what you need to see if you're going to get something going on the upside, right?
Yeah. I think in all markets you really have to pay attention to the stocks, because this has been true since I can remember I've been trading. And that said, though, I mean, it's always good. It's fun to speculate on, okay, well, the market could do this or this. But at the end of the day, you have to take it one day at a time, because markets do change on a dime. And if you try to get wedded to some sort of predictive view on where the market should go, then you might miss that day-to-day action that tells you that your view is wrong.
Yeah. But anything could happen. I mean, I would say nothing would surprise me. If we went back and tested the lows, that wouldn't surprise me any more than breaking out. You know what I mean?
Yeah, exactly, which is why MDM's present in cash. But, again, that can change on a dime, because day-to-day things can change.
And I think if you're not really nimble, or at least willing to figure out when something is not working for you and bailing out quickly, you probably shouldn't be getting aggressive in this market. But there are some things to try out. I think the data Bible gap up is good. I think the Grub Bible gap up is good. The LinkedIn Bible gap up. Some of the other moves that I'm looking at, I like the volume dry up on XON. It may need more time. I know it suddenly started jacking after I mentioned it here. I think it got up to 30.70 or something like that. It's 30.37 now. I tried the stock a couple times. It's too thin for me, so I don't mess with it. I go with the thick stuff. I like them big, and I like them chunky, like that rhinoceros in that movie. I forget what movie it is, Madagascar or something like that. Anyways, somebody says, or asks rather, what does took it from me right away mean? Well, what I do is if I go in and short a couple thousand shares, they take it right at the near the offer rather than at the bid. So there's an algo or something looking for something to come in on a market order, and they're going to pick it off ahead of where everybody else is bidding. So you see them pick it off there, and then it immediately starts moving back to the upside. That's what I'm talking about. So it's a pretty simple concept, and the basic idea is that you go in to short something, they fill you real quick, and then it starts moving up. So what do you know at that point? That they took it from you. So, and somebody's looking to buy it and push it higher. Pretty simple. Also, the legs up is shorting. I don't know what that means. Somebody asked a question. NXPI reported earnings on 2/4 after the close. That would be Wednesday after the close. It moved lower yesterday, and I sold my position. However, it popped up today. Is this normal behavior? What do you mean normal? Anything's normal, I guess. I think where was your stop? If you're buying into this stock, Dr. K, where would you have put your stop on this thing if you bought any of these? Let's say you bought somewhere in here, and you see it come in like that. That's really not much of a move. Do you think it's you should be using the 50-day moving average as your stop?
Well, I mean, if it falls back into the base, it could be basing for quite a while longer. So I'm more prone to just exit the position, once it falls back into that base, because it should have really gone. I mean, if it's a valid pocket pivot and the market's good, it should just take right off. So I don't want to sit with dead money, for a number of days. So I'd probably sell it out and wait for the next pocket pivot or breakout.
Yeah, and this is a shakeout, so they shook you out. But I don't really see any breach of support, and there was never really much of a breakout here, although you did try to break out here and you pulled in. And today you could always buy back, or you could just forget about it and go buy LinkedIn or something this morning closer to 260. That happens, so it's not abnormal. Shakeouts are common in the market, actually.
Yeah, if you're not pressed for, if you have a lot of capital and you're willing to sit with the sideways move, there's nothing wrong with sitting with the sideways move, because chances are, as longer the sideways move goes, the greater the chance that it is going to break out to the upside, provided you have the market in your favor. Obviously, if things are going lower and the MDM's on a sell and you're sitting in a sideways move, if that sideways move can hold up against a market going lower, that's a sign of strength, and I would then try to sit with that sideways move. But the moment it undercut any major sign of support, I'd be out of it, because that's telling me the market really is turning sour.
Yeah, I mean, when this one has a reputation for that, look at, there's a break here, turns around, break here, turns around. This one looks pretty bad, but it never violated the 50-day. Somebody asked, do you usually use market orders or limit orders? I'm not sure whether it matters, but I don't really waste my time with limit orders. Limit orders are for dorks. I just buy the stock. If I like the stock, I just buy it. So, if I see something pulling in and I think it's going to pull into a certain spot, I might set a limit order for part of the position at the support level, or maybe 20 cents above or something like that. But I don't, if I think something's going to move, I just buy it. Like yesterday, I shorted data at the market. And then when I saw that they just munched the stock up and turned it around, I mean, I just covered it immediately at the market and then went and bought it relatively heavily at the market. So I don't, if you know what you're doing, you don't need limit orders. Limit orders are for clueless people for the most part, unless you've got a specific idea in mind. So on a pullback and you figure something might pull back to a support area. Anyways, Loco's tightening up here before earnings. He had a pocket pivot somewhere in here. Was it here? No, it was here. Yeah, and backed in, moved out. It's trying to turn here. Excuse me. I'm a little bit under the weather. I've got some cold trying to get me, but it's not really there yet. Hopefully I'll continue to fight it off. But I know that my kids' schools, half the school's out with the flu. What's up, Dr. K?
Zinc it. If you got any kind of sore throat, the zinc will reverse it within a couple hours.
Oh, damn. I was smoking medical marijuana. I thought that would work.
That's like the cherry on top.
Because I'm just a crazy Mexican. And then, of course, I started lusting for white women, which, my wife is French-Irish, so I guess, that explains it, right? Let's see. Any other brilliant questions here? I want to go through my list. Oh, let's look at Tesla. Now, Tesla coming out with earnings next week, I think, the 11th. Moves up off the lows. You can see, so you get the undercut here. And the other thing to think about here is that this thing had a long break. 1, 2, so 1, 2, 3, 4 legs to the downside here on the daily chart. How does it look like here? On the weekly chart, it really looks like 1, 2, 3. So you get 3 legs to the downside. And you undercut here. And I know a lot of people are salivating. They want to short the stock here, which is pretty typical because, number one, they're late, and number two, they're not really taking into account the position of the stock within its overall base. So a rally here is logical. And I guess it could have broken out, but didn't want to here on this heavy volume. And when it started coming up, I think it's telling you it wants to drift higher. And I'm not sure what I would do with this. I'm not really interested in shorting it, so I got my long positions and they're working for me. So I'll just stay with that. Illumina, this is a stock that doesn't know what the hell it wants to do. Breaks down, breaks out, comes back in. I just don't play, so it doesn't really interest me. Come on, you guys. Who's got some other brilliant questions? Lay them on me. Oh, I see Grub is drifting in a little bit. All right, you guys, this is a great stock. Everyone should start buying it and push it up. Let's see. Can we get it to move? There's data starting down 16 whopping cents after being down about $2.50, which is only like 2% or so. Remember to keep in mind your percentages whenever you're playing with something. Did you already cover Yelp? I'm not short Yelp, so I'm not sure where you got the idea that I was short it. And I think that's a stupid question to ask. Why would you ask me if I already covered it? I mean, I covered Yelp probably down here when I was shorting it here. Because what I'm doing with why does it matter? And why do you need to know what I'm doing? You know, O'Neill used to really get on our ass for that. He, you know, if you ask him, well, what are you doing with your stock, or blah, blah, he's like, what do you care? Don't ask me about my stocks. So don't ask me about my stocks unless I want to tell you. So you know, don't ask me if I covered Yelp because I'm not shorted for one thing. So where have you been? Meant in the webinar. Oh, okay. All right, I forgive you. Well, I don't know. If you wanted to short it this morning, you could have shorted the gap down. It looks like a shortable gap down. Maybe it's going all the way down to 30. So, but you know, if I were shorting it in here into I probably wouldn't hold it into earnings just because I don't like to do that. So, but it could have been a shortable gap down if you want to play it that way. That said, you know, you have to ask yourself, do you get more juice on the long side or the short side? And maybe we get a bifurcated sort of market here that really doesn't go anywhere, but it offers plays on both the upside and the downside. But again, you know, I'm noticing on the short side, yeah, I can hit it with Yahoo, I can hit a little bit with Facebook, but for the most part, I'm not getting much traction. And to be honest, the net effect on my account performance is almost nothing. So, you know, go up 10%, go back down 10%. Go up 10%, go back down. And that's pretty much the way it's been. So what I need to do is get some traction in something that has potential for a big upside. And last year, the way I did triple digits was by focusing on certain stocks and the proper setups and then playing those heavily. You know, things like GW Pharmaceuticals when it had its big move, Tesla, both long and short, Twitter off the lows, you know, stuff like that. Do you enter stop loss orders right after you buy? No. Do you have any thoughts on Netflix short sale? I probably wouldn't be shorting it. You know, it might be a big head and shoulders, but the other thing to think about here is it is holding tight. So if it's going 2 weeks tight now, let's say it closes roughly where it is today, then that's constructive. Usually you'll see it, you know, run up. You notice here how it gets tight and then it starts to roll over. So you'd want to see it roll over, and if it broke down through the 10-day on volume, then maybe you could short it using that as your stop. But I'm not sure, you know, what. I'm just not sure I'd be wanting to go short here. AKRX had a big down day on 130, 2015. Where's that? Here? Oh wait, that's 12:30. That's not really a big down day. It opened at 42.86 and it closed at 42.58, and it was down close here 43.21 and close at 42.58. So that's like you know, 60-70 cents. That's not really a big down day. So what it is a big volume day, but probably what's going on there is a month-end rebalancing, and you'll see that a lot of times at the end of a month where you get a big volume in a certain name, or it could be options expiration. So, and whether it's positive or negative, I don't know. It could be either, depending on what it does afterwards, and it's probably related to some index adjustment or options. You got anything about this, Dr. K, that you can add?
Well, I think you pretty much said it all.
Okay. Let's see. We still got 9 minutes to go. Or we could just cut it short. Anybody have any... how do you handle stops on your buys? You just watch the stock and sell and hit your mental stop? Yes. Gold getting crushed. How do you set mental stops or
mental stops always? You know, you don't want to like give a market maker an excuse to trigger your order. So if you have the means, then definitely always use mental stops.
Yeah.
If you don't have the means, then yeah, it's better be safe than sorry and have some sort of stop in place.
Agreed. Let's see. Gold getting crushed. Yeah, I mean, I don't. it's like you saw this move and the gap up, and you can try and play, but it's so many other factors that figure in here, like whether it's going to be QE or not or whatever. I don't know. I think longer term gold probably does go higher, but like we pointed out, it's just bouncing along the lows and trying to round out some big base, but you don't know, and there's nothing really going on here that gets me all that excited. One way or another, it's really hard to play, and I don't really mess with it anymore. How have you been utilizing the intraday updates with HGSI? Well, I'm not sure what that means. How else would you utilize them? If you're looking at the intraday updates, you'd be looking at what stocks are up on volume and what stocks are down on volume. And then you can look at the charts and see if something's going code blue. So, pretty simple stuff. There's nothing that exciting. And I really think it's a matter, if you're going to start using it, you need to start using it, basically, and then figure out, how you're going to, what it's showing you and what you're able to glean from it. So I know some people are so dumb they really can't glean anything from anything, and they need people to tell them what to do and when to go to the bathroom and what to eat for dinner and what to think. So if you have no ability to think on your own, and to use common sense when investing, then all the data in the world is not going to help you. But I think for the most part, if you can look at what's happening on an intraday basis with certain stocks that are moving earlier in the day on heavy volume or going down on heavy volume or even volume dry-ups, it's useful information. And we get that both from Wanda and HCS Investor Software. So I'm covered. I like it. We got some email from somebody who's not even a member, and the guy wanting us to recommend. First, he sends us a spreadsheet of his trades that we're supposed to evaluate for him, and then he wants us to recommend a software program that will alert him to pocket pivots during the day. And to me, it's like if you're too dumb to be able to figure out how to do that, then you really shouldn't be investing. And for the most part, when it comes to alerting me on pocket pivots, just give you an example. So for Intrexon, XON, for example, I got an alert on this thing, and the highest volume in the pattern is here. So that is 1,322,509. So I'll set an alert for volume at 1,323,000, and if that triggers, then I'll get an alert on my e-signal. So you have to, and there's no automatic way to do it. You got to set it up and see, like I'll go through my buy watch list and I'll see what stocks are setting up in potential positions for a possible pocket pivot, and then I'll do the hard work of setting up all my alerts for the next day. And that's how you operate. So there's no simple way, there's no magic software, but I just think it's amazing that people who aren't even subscribers somehow think they have a right to your time and expertise. And as far as I'm concerned, they can go, well, never mind. Anyways, do you have a preferred time of day to trade? Yes, during market hours. Thanks for the idea on the pocket pivot alert. O'Neill says you don't have to bother about PE. You have data PE 190, estimate earnings minus 52% for 2015. You don't really. I mean, I wouldn't worry about it. Obviously, Fidelity doesn't worry about it because they've been buying the crap out of the stock, and that's more important to me than figuring out PEs or anything like that. I mean, yeah, using PEs, that's amateur stuff. And somebody who's like, uses valuation analysis because that's what they teach in college just shows that they're amateurish. But they came out and blew out earnings yesterday, and that changes the ball game a little bit. I mean, think about GW Pharmaceuticals. That was a big mover for me last year. I did well with that, and it was showing losses. Think about Tesla back in 2012, and I did well with that stock, buying it in the mid-60s, and it was losing money. Solar City, buying that one around 1920, and it was losing money, and then it ran up to 70. So the whole idea of PEs are it's wrong. So, and if you think there's some validity to PEs, then you're just an academic with a clueless one, I might say. Anyways, anything else? Last questions before we sign off. Nope, got nothing. anyways, we'll see where the market goes. As I said, I think I see, well, I see things I can buy, and if you buy them and then you're up on the position pretty quickly, that's positive feedback. Meanwhile, the short side doesn't really give me any traction, so that's also negative feedback on the short side. So based on that, for now, I'd have to look at going long and see how these work out. Fortunately, I already got a 10-point cushion on LinkedIn, more or less, and a little bit of over a buck cushion on Grub and a couple of bucks on Data right now, so we can sit back and see how they play out. And that's pretty much it. You got anything else to add, Dr. K?
No, I think we've said it all. Just deal with these market uncertainties and play it by the stock on one day at a time, because there have been and will continue to be opportunities in terms of stocks. When MDM does see an opening on the long or the short side, of course it will switch out of its cash signal, and that time could come anytime. But at the same time, we have been in a very sloppy market, so MDM recognizes that, and we don't want to get into catching a lot of false signals that are short-lived while the market is gyrating here.
All right, very good. We'll catch you guys next time. Take care.
So long, everyone.